Yes, guys, welcome to this video. It's been a while ever since we did these, so yeah, I'm actually back. It's been a moment, man, ever since I did these, but yeah, we are on track. I've been tracking the markets, and everything has been. I have been having ups and lots of downs, but finally, I'm back. Let's get to see what we are experiencing or what we are expecting this week on gold and maybe some major forex and maybe see NQ and ES, what we are expecting. That's NAS and S&P 500. So we're going to be starting with gold from the image that we have. This is the weekly time frame, right? These are weekly candles, and what we can see is the market has been bombing upwards. The market has been expanding really bullishly with some strength, and yeah, I think we're on a bullish trend, but I think the only thing we should be actually trying to look for in these types of market conditions are buy positions until we are proven otherwise. So we don't want to force ourselves into getting sales or trying to be shorting the market when we haven't actually confirmed from the higher time frame that there's a likelihood of the higher time frame dropping lower, giving us opportunity of the lower time frame for shorts. So from the weekly time frame, what you're seeing is the market is really bullish. We are next to the all-time highs at 38.96 right there, and we're almost there, which I think this week we will be taking that all-time high in form of the previous week's high. Then from there we can see what the market will be doing. So this, if the market is going higher, that's what I actually have. Right. So from the weekly, we can't really see anything much from the weekly time frame, but of the daily time frame, let's see what the market has been doing. You can see market is respecting bullish order flow, breaking through, forming other bullish order flows, pushing, following through, sweeping the all-time highs, and that has been the trend until this last week. On Monday, we saw the market expand higher. Tuesday, Wednesday, Thursday, we kind of consolidated. On Friday, then we didn't really have major push-ups, but the market moved. So what are we seeing from this daily time frame is around here. What we're having this daily fair value gap that was traded into on Thursday, right? And now Friday expanded higher. We have these all-time highs in close proximity to that level. So to me, in the daily time, what we're having is a more of a bullish price action, and therefore the only thing I should be looking for is bullish prices, and the level that I should be targeting is firstly the all-time highs, because what we usually tend to see is whenever the market reaches the all-time highs, we drop, we reject. Also this one, we swept the all-time highs, we rejected. So in this case also, we might see maybe a possible push, then a drop. So we will be monitoring what will be happening around these swing high. But if we run through that high, right, as you can see, this was a run on Monday last week. We ran through that all-time high, then we pushed higher. So if also we run through with expansiveness like this, then we can expect a continuation going higher. But if we just sweep the high and then we start rejecting, then I think room for patience should be in play, right? So from the 4 hour time frame, I should have these visible below. This is a 4 hour fair value gap. So this is my 4 hour fair value gap there, but am I really expecting to see a drop? I actually don't know. 4 hour FEG, because in these bullish scenarios, rejections, you can see with this rejection, the market didn't even, we had a good example, number one over here. We had a fair value gap that was formed, but this candle closed up so bullish, right? We didn't form an immediate rebalance. We left a 4 hour fair value gap here. Same to this scene, we left a fair value gap. We've left a fair value gap. And somehow with this rejection, is it likely that we may see a drop onto that level? So it is possible, but the probabilities of that happening are very low, right? And since we have the all-time highs, and also the 4 hour is showing us some clear price action that this fair value gap failed to do its job to push prices toward this low. And if we failed, then we are expecting to see this fair value area high being taken, right? So these are the highs I'm actually watching for. And what I will be really watching is we will drop onto the 1 hour time frame, whereby we'll try to find some bump on the road that might lead to these rejections, then see what you can expect of that. And immediately we drop onto the 1 hour to see what did happen. So over here, the market had this fair value gap, a 1 hour fair value gap. Market pushed on, tapped into it with this candle, right? Market tapped into it with this candle. Then we haven't really run these, right? These high. So this is a position that I had. I actually closed it because of the weekend. I closed it before the market closed. I think with this candle, that candle, I did close it. But why are we having this consolidation? I think it's because we have this resistance on the way or pumps on the road. It doesn't really make the market go lower, but what we tend to have whenever we have a premium array is the market usually tends to consolidate, react into it, and then maybe expand. So that's what we did see. We saw this candle trade into it, right? This bullish candle. We rejected. Since then, we haven't really broken through that high that tapped into that fair value gap. What we've been seeing is just sweeps. So we saw sweeps of that. And until we break through, right, I think it's in close proximity to the all-time highs. So if we break through that high, then I think we're gonna be heading towards these all-time high. Then we can monitor what will be happening around that all-time high. Can we expect a continuation higher, or should the market maybe show some retracements? So that's what I will be actually watching for. And therefore I just have an alert slightly above that level, whereby we have a bump in the road, right? Because of these this fair value gap. This is the candle we haven't really broken through or run through. So if we break through that high, then I'm actually going in for longs, targeting the all-time highs. But if we fail and we rally lower, then somehow are we likely to see maybe a sting into the 4 hour fair value gap, possibly sweeping these lows, these 1 hour lows. Then we continue higher. I think what I'll be, if the market does that and we displace lower, we form fair value gaps, especially maybe a 1 hour fair value gap, and we sweep this low, or we tap into that 4 hour fair value gap and we sweep the low, then we start displacing higher, disrespecting the bearish fair value gaps that could have formed here. Then I think that will give me another good opportunity to target the all-time highs. So that's what I'm actually watching for gold. These two levels, could we run this level to continue higher? And if we run through these, are we also likely to run through this, then we continue higher? Or if we rally lower towards this 4 hour fair value gap, do we displace with fair value gaps going lower, and then these fair value gaps don't do their jobs, then to engage higher? And but if that actually doesn't happen and the market start continuing lower, then I will be on the sidelines until everything proves that indeed we are shorting. But as of now, the market is only screaming for longing opportunities. So my key level 1 and key level 2, the levels that I will be watching. Now let's sync into NQ. NQ also has some nice price action. That's why I'm actually, I did look onto that earlier on. I was trying to analyze them by myself, and think, yeah, and I decided to do this right with you guys and also post these. I want to be really fully back to be fully back, because whatever I have been having is actually done. All right. All right, this is the weekly time frame, and what can we see also from NQ is that the market has really been bullish, right? And in this case scenario, what we want to do is we don't want to engage in bearish prices, because that's not whatever we are seeing. Yes, from the monthly time frame we are sweeping that high, but that isn't a guarantee that the market is actually now turning to be bearish. We need much more confirmations, so I need to have that level there. We need more confirmations to confirm to us that the market is actually bearish. So we have the previous month's high that has actually been swept. Not that emoji. All right, where's my emoji? Yeah, this one. I love using that as my swept liquidities. All right, it means liquidity has been swept if you see that emoji. So we have that. And if we drop to the weekly time frame, what you're noticing, come on, visibility, I think all on. Then if we go to the weekly time frame, what we're noticing is this week we swept that high, and we are actually dropping right there. I think, yeah, we are actually dropping after we are having that sweep. But how did the candle close? It closed so bullish, and since we have been in this bullish trend, we have only one bearish argument. But for the bullish arguments, we have the structure supporting it. We also have maybe lower time frame structure that is maybe more of bullish, but we need to also consider that the market, since we have already swept these, we need to be keen, because bearish prices might maybe start to show. And if we have that, then how can we react to that? The least I want in these bullish markets is try to engage myself in shorts before the market has fully communicated shorts, right? So we need to identify from which levels that the market will be fully identifying itself to be shorting, and how can we approach it, right? Because we don't really need to jump into conclusion calling the highs before that has already actually been confirmed. But as of now, what you're seeing is the market is bullish, because bullish arrays are being respected. We have liquidity sweeps that are discount liquidities being swept and the market displacing higher. We have bullish fair value gaps being formed. So we have more of bullish arguments compared to a bearish arguments that we actually have. So with these, we have that weekly time frame hasn't really doesn't have really much to give us, but I just see the market has been just trending bullishly, and need to drop onto the daily time frame. And from the daily time frame, what we are seeing, we have this daily fair value gap. Sorry. All right. I think it's good. And from the daily, what we're seeing is we have this daily fair value gap has actually been traded into, and we kind of rejected, but not really. Then we have these all-time highs. We have this fair value area over here. So using these bodies, because they are the one that are overlapping with that fair value gap, using the bodies, we can see we can see that the market traded into that fair value area, and it's a key level of which we will be monitoring what will be happening of this daily fair value gap slash that daily fair value area. So in this case scenario, what we can actually expect, if the market is bullish, we can maybe watch to see how price reacts to these PDL, previous days low. We might have a two candle rejection, or price might just spool going higher. So we have previous day low, bottom right. So we have these daily low that the market might also decide to drop deeper, have a sweep. A good example was this. This candle dropped, swept all these previous days low liquidities, then we pushed higher, right? Another good example is this one. Tapped into it, we pushed higher, and let me find a clear example, no? Another example is this is the candle that dropped into that fair value gap, but the market just opened, didn't really sweep this, and we continued higher. But for this one, we had that fair value gap. This candle didn't really trade into that fair value gap. The market swept the daily low and also tapped into that daily fair value gap. Then we expanded higher. So we have different uh, case studies that we can expect of maybe these markets to do, right? So it's upon us to maybe be careful and be watchful of what the market is likely to do. So the daily fair value gap, can we maybe just open and spool higher? And if that happens, how can we know that we will not be dropping deeper into that PDL? We drop further into the 4-hour time frame, and of the 4-hour time frame, what you're noticing, let's align the PDL. What you're noticing is we have a 4-hour fair value gap that had actually has formed, which is also a sharp turn because we did have a bullish fair value gap that swept these liquidities, the all-time highs, and then we dropped, forming a bearish fair value gap, which is a sharp turn. And since we have traded into that daily fair value gap and also into this 4-hour fair value gap, if we start displacing through the PDL, right, not running it, if we just sweep it and we push higher, I will be more interested in buys, but until I've seen how price reacts to this 4-hour fair value gap. So for me to be bullish in this case scenario, I'm not bullish if I see 1-hour fair value gaps forming from this PDL to this 4-hour fair value gap. I'm not interested in price action between these two PDRs, these liquidities and these imbalance. What I'm really interested is price above these levels and how price action communicates to me above these 4-hour fair value gap or below this PDL. If we see price starting to run through, then we can actually expect the market to drop towards these lows, right? If we actually see price running through. So if we have a thing like this, I think if we start price running through this, forming actually bearish fair value gaps, then that's the thing I will actually watching for, something of that sort, right? So price to displace form fair value gap, then this is the level that I'll want to actually engage going lower. So that's what, though I'm not really leaning more over bearish, because in other times, a good example was this. Assuming that we had seen price displacing these, what we could have actually targeted would have been these lows, right? But that wasn't the case because the market engineered these lows that were swept, then the market pushed higher. That's why it's always low probability to go against the long-term trend, right? It's always a low probability to go along against the long-term trend, and therefore I will not really be interested in bearish prices until we have further, unless maybe this area, the second distribution, maybe that's when I would have actually seen this market seems to be bearish. But to be bullish, what I'm actually expecting also to see, oh no, okay, assume this one, all right. Okay, what before that, let me push this. All right, if I'm bullish, what I want to see is maybe price tap into these 4 hour fair value gap, a bullish one. Then expect a retracement, then see displacement above this level, right? If we see displacement above that level, because I because what will have happened in this price action is maybe a candle trade into it. We expect that rejection, as it always happens. We expect a drop, and if this fair value gap leads to another fair value gap below here, I'm bearish. But if that rejection is, we see a candle closing above that rejection, then I'll be actually bullish. A good example was this case scenario, right? We had this 4 hour fair value gap that would have pushed prices towards these lows, right? But what happened with this candle is we traded into this a daily fair value gap, we rejected, right? Then after rejecting, this candle closed above this candle rejection, the rejection high. So with that, that's when we are expecting bullish prices. So the same scenario to this, I'm expecting to see price trading into it, then rejecting. So this drop is a rejection, and then if we close above that levels, then I'm expecting price to push towards the all-time highs, and that's what we'll be expecting of the lower time frames. So that is it um, for NQ, and I think I will be actually having alerts at this point in time. Alert there. Do we have a small fair value gap here? So we also have the slightest of fair value gaps. Sorry for doing these, guys, but the low of that candle is at 25,156.00. The high of this candle 25,156.00. So they had an overlap. So at the exact price, we actually don't have a fair value gap. So we don't have any pump in the road unless from the 1 hour. Yeah, maybe we might actually see a sweep of that high, a drop, right? Then a continuation going higher. So that's what I will be expecting if I'm really bullish, right? But if we are actually bearish, we need to see a breakthrough this and we start displacing, then we can expect maybe the first target, the second target going lower. But I'm more leaning in bearish, in bullish prices. So let's see. Yes. All right. My data. All right. It's finished. Let me buy some. Then I'll be back. All right. Let's get cracking. I think now things should be okay. So yes, also from this hard time frame. From the higher time frame is the market is actually so bullish, right? The market is bullish. What we want to engage in is a bullish pricing or long positions compared to short positions. So if we are longs, if we get longs, those are the targets that I'm actually expecting. What does the monthly time frame tell us is for ES we are slightly above the prior candle high, right? And from the weekly, yeah, nothing much. We created an immediate rebalance, didn't really tap into that fair value gap, and that's why trying to engage in short positions is really difficult, right? We have more bullish momentum compared to a bearish one. See, the sellers couldn't even drive the market towards this fair value gap, so the probability of sales working out are very low. Yes, we can have a drop, but for you to be profitable, it'll take you many losses compared to if you're trying to look for longs. So the market failed. We rejected off an immediate rebalance, pushed higher. We are closing above this candle high. Also last week's high, we are closing above it, which I think is more bullish compared to Nasdaq. So from the daily time frame, what we can see is these the all-time highs, and the market is actually running through this fair value area, right over here. For years we have no bullish fair value gap, right? We don't actually have any bullish fair value gap. What we're seeing is this candle just overlapping, creating an immediate rebalance. Nothing really much from the daily time frame because we have no fair value gap, and whatever we can maintain is the previous day's high, which is also the all-time highs, as well as the previous day's low, because we might also tend to see a sweep of that, then we continue higher, and PDL right there. But if we run through it, then we will be coming back to see what will be happening. For now, sticking to more of a bullish until we have further prices are confirming to rise. So yes, yes, we also have don't have a bearish fair value gap compared to Nasdaq. So this is the Nasdaq. We have a bearish fair value gap, of which I think it's critical for us to watch what will be happening around that level. And also for Nasdaq, we swept these Thursday's low, 10 a.m. For years we haven't actually swept it. So currently we are having an SMT because this low is maintaining for ES, but for Nasdaq we have already swept it. So NAS is actually ES is actually tricky because we did have this kind of rejecting of this fair value gap, right? So this kind of rejecting of that fair value gap, then this candle created the all-time high and also rallied, and we closed below that. So this is a scene whereby we can expect lower prices, because now we don't have the two candle rejection, right? We are running through the low that reacted into or rebalance that fair value gap. Whenever we see that, then most likely we want to see the next target being traded into, which we have that lows, those lows were taken, and also later on we can see we formed that previous day's low, which is another form of liquidity. Other than maybe expecting to see the market drop to sweep these, first we want to see what will be happening around this level. If we see market displacing through, if we see market displacing through, forming fair value gaps that are being traded into, then most likely we can expect to see these lows are being taken. So the liquidities around this area, we can expect to see those being taken. If we see displacement below this, right, because we have the run through these, and if we go to the lower time frame, right, at the time this was being run, could we have actually gotten any position targeting this low right there? So let's see whether we could have actually gotten any position. Going to the 15 minutes time frame to observe, this is the low, but the market closed it at this with this candle, so we couldn't have actually gotten one because it was the same candle that ran through this low and also tapped into these liquidity. So I think that wouldn't have given us a good edge, but back to the 4 hour. So this is what I'm likely expecting to see. If bullish, right? If the market will be bullish, then we can anticipate maybe if we drop to the 1 hour time frame and see whether we have any 1 hour bearish fair value gap. So if the market rallies into this 1 hour, FEG, if the market rallies into that FEG and does something like this, we rally higher into this FEG, we just wick lower, and with this candle or the wick that tapped into this fair value gap, if we see a price actually pushing above it, breaking through, then we can expect a thing like this. So if we break through these highs that we experienced a rejection, then we can expect a continuation going higher. But if we displace through this low, market drops displacing, then we drop lower below this level, and then I will also anticipate to see these liquidities to see these liquidities being traded into. So that's what I will be watching for. And the week is still young. Want to see whether we have a run through. Then we start forming. If we form bearish fair value gaps, then that are later on disrespected, then I can expect also something like this below this level. So that's what I will actually be watching for, and see whether the market will deliver to the all-time highs again. So for DXY and EU GEO isn't really clear. I'm also watching for, if I'm bullish, I want to see how price reacts to this level, right? I want to see if we sting into it, then we start breaking through, then we can be going for these highs. But also if maybe we because we are failing with this fair value gap, if we displace also through it, right, and then we start displacing, we can expect to see the market actually dropping towards these lows, right, this PDL and also these lows, disrespecting these daily fair value gap. So that's what I'm actually waiting for. Let's see what will be presenting. And before that, I would love to take these screenshots of what we have actually analyzed, and maybe we will be using that later on. Okay, need to delete some. All right, if we break through that, yes, so something like this. Okay, let me redo this one. Hopefully you guys, you've been amazing, and hopefully it's really relatable with you guys. So if we break through that, what will be my targets? Those will be my liquidities. But if we see a break, then a retracement, then this is the level that I can actually be watching for if we actually break through that low. So this is what I will be expecting for NAS. But for yes, yeah, no, that was yes, this is NAS. So if NAS is actually sorry, is actually the cleaner pair to be watching. And for gold, all right, gold, there you are, Mr. Gold, right? So what will be we've said I will be watching, how price reacts to these levels. So if we break through over here, then I can expect a thing like this to the all-time highs if we break through that. And also, I'm not really looking for bearish prices. If we see a sweep, maybe the market sweeping, we see maybe this bearish fair value gap that was formed around this area being maybe have that bump in the road, then displacement, then we can expect a thing like this. So we'll be watching. We might drop with fair value gaps here, push higher into those bearish fair value gaps that will fail, then the market continue higher. But if we displays going lower, then most likely we can be going for these lows, or maybe we can engineer liquidities like this that the market will use to continue higher. So that's what I'm actually expecting, and we'll see what will be happening. Until next time, guys, be safe.